Welcome to the channel. I'm Yanis. I'm also known as the Conscious Day Trader, and today I'm going to run you through how I made half a grand or 526 dollars, trading the pound dollar. And we did that using the ICT concept for my entry, and then the Scruffy traders, what he calls madness, to manage the trade in and out.
It wasn't hard. See, madness, as you know, is like gravity.
So let's jump onto the screens. This is Trading View. People who already follow me, they will be familiar with what I am doing. And what we're going to start is I wanted to run you through how I look from the start to finish of the trade. So we're going to go into London. If you haven't done that before, you can click on this bottom here. I was just looking to see where the US Open is. Just click on London. And then we're going to go on a vertical line. And we're going to look at that, the day open. So today is the 15th. So at 12 o'clock, that's where the day started. And where the London opened at 8 o'clock. What we can see is that from the start of the day, we had the sell-off of the pound, weakening to the dollar, and a big push continuation of that downtrend in terms of the day coming down into previous areas. And we're going to look at that from a daily perspective to create a bias for the day. And if I use the replay, what we're going to do is actually, if we go to the 15-minute, take the replay, and I'll take you where I started looking at the graphs, and that was at 7 a.m. So that's what we had. Okay, and just before the 8 o'clock open, what we do is go in and create a bias from the daily. Now, this is where my trading with the Scruffy trader comes into play as well, because I created a bias looking at different elements such as key monthly levels, weekly levels, daily levels, top-down approach, RSI, the MACD. All these gave me a bias for the day. But also looking at the price action. So looking at the price action on the daily, we can see the pound has been on a screamer of a move on the tops on the upside since it hit the lows of 103 back in 26th of September. So as we can see here, talking about ICT concept, what we see on the daily is getting out, taking out this buy side liquidity at this area here. So we have equal highs, a lot of volatility, a lot of liquidity will be here from, like we've discussed before, people that have been shorting this, they would have their stops, their buy stops there. And as we can see, we've had that push, no real big swings in between those moves, and we saw that break above that level, take out the liquidity and potentially reverse or continuation to the next area of liquidity, which is here, buy side liquidity. And according to ICT, that's how the algorithm works. The algorithm will take easy targets, and it will make its way up to removing that liquidity and then taking it to the direction that the big money wants to take the price to. So let's keep that in. So now we know in previous days we traded up into that liquidity. So our bias was long until we break this area here. So my Scruffy madness was, I looked at it and it was conflicting, because on my monthlies were showing one thing, on the weeklies were showing another thing, on the dailies were showing another thing. So I had an idea of what's going on in terms of the indications of the lines, but in terms of ICT, where you look at what is the next candle going to do, you have to predict, what do you think this candle here is going to do today? Is it going to be a red candle, or is it going to be a green candle? And he also talks about the power of 3. And the power of 3 is that the market will open, any daily candle will open with a Judas move, which means it's going to go the wrong direction before it goes into the right direction. So you will have that small wick going in the wrong direction, then the body, if it's bearish, the body going down and finding the low of the day, and then retracing slightly up to close the day. That will be a bearish candle. And if I can show you one of these, it would look like, for instance, like this. So it would open, go down, up into the high and close above, slightly down, up all the way to the top, then close above. That sort of is a bearish candle. And what we've been seeing here is a block of the bulls pushing, well, he wouldn't call it bulls, he would call it like the price pushing towards this area of liquidity. So that's been taken out, and then we're going to go down to the 15 minute to see what that looks like. We had that huge push over this liquidity area, right? So taking out all this area of buy stops, and what it has created is a very, very big, you can see it here on the left side, it's quite obvious for the ICT people, value area of this gap here. And I'll just show you what I'm talking about. So as we said, it has an enormous buy from the news, and it hasn't been filled. The people that would want to be filled either long, it hasn't long at these prices, the price didn't retrace to fill the gap, and that's what he calls a fair gap value. And normally the price will retrace before it goes in the direction it wants to go, either to break even higher, or it would retrace, take all the fair value gap. If it's created a fair value gap, then on the top, it will take that value before it sells off. So that's what I was looking at. And so my bias generally was long. So what I was waiting for was for a retracement into the fair value gap, and then a break of structure that would show me that the market is going higher. So let's go to areas, the current day here, which was, now we have that in mind from the daily, right? And you can see that has not come to the bottom side of the fair value gap. So that is still in play, this area here. But we did fill all that area of liquidity of the fair value gap on the daily there. So now on the 15 minutes, we just have that in our mind on the daily, that this is potentially where the price can come down. Or we've seen now in the 15 that there's created another buy side liquidity area, which is this area here, for buy stops. Okay, so the market can do two things. Is either going to move up to take out this liquidity area before it goes down, or it's going to go down to fill in this fair value gap. Those are the two areas that is going to, the algorithmic trading will want to take the market. But we do have big volatility in the day to day because of news, and that needs to be taken in account. When the news comes in, big money comes in, the algorithm will follow after the news. So if the news comes up here, it would make sense for the algorithm to take out the liquidity side of this. Or if the news was bearish, it would make sense to push the price to that area there. So let's bring it to the current day and what we saw. So as you would do on any day, you would take the high and the low, immediate high and the low before the open. So this is 6 o'clock. Let's go a candle next. And that is 7:15. Okay, that was the open. So we had information from here backwards. So that was the low and that was the high. What did the price do? It broke lower. Now in my head, I'm thinking, I want to be long in this. And this is great because in the power of 3 of the ICT concept, he says that the price is going to go against you before it goes in the direction that you want to. So you want to see this. So the price going down was a good thing for me. And all you need to do is need to see a reversal structure and in an area where that liquidity has been met from the daily that we were talking about earlier. So if we take it back to the graph, I'll show you this. So we had a break of this structure. And if we continue, so now we have a confirmation in the area of the break. So you saw all that area was filled. I was interested in here, so I had a position long here. Ideally, I would want it to be down here because my stop, I can manage the trade easier from this stop there. It's 29 pips. This area here to have these areas, because if I get it wrong here and it's still going to take the liquidity down here, that is a long way that and I couldn't be in that trade. I would have to take a loss. So I did start with a small size 0.25 and then I built up into my 0.5 position. So let's do that. And then it cracked through and I was long here. So I would have 2 positions. Let's put a little an arrow. So I had an arrow there and an arrow there of 2 positions going long. And I had to sit in a bit of heat. My stops were under the below the area here, but there's these ones here. That swing low here, and in an ideal world I would take it here, but that would have been too much for me to take. This is where Scruffy Madness comes in. I can't give you how it works, but it's very similar to pound averaging, where you build up a position backwards. And if you want to learn more, go and follow him on YouTube and his Discord. He's a great guy, and the community there is brilliant, super positive, and they're really, really helpful to new traders. And let's see what happened next. I got filled in here. It went positive there, and I took some profits out of this position. So when that hit my previous position, I closed that position. Now I've got 1 position here. What happened next? Came back down, and I filled another position. All the time, this stop is not moving, so my risk is decreasing as I'm being profitable in the trade. So then we did next one. And then it crashed down. I had a bit of heat because it came close to my stop, but you have to take that where risk management comes in. And then it went back in, and I took another profit. So this candle took away. I didn't close this candle when it went up there because I wanted it to go higher. So as you can see, I was bouncing the price. Now, ICT people would hold that position and stay in that heat, even build up in this heat here, build a position up, and then let it run to target. Now, in terms of target, what would your target be? And as ICT, pause the video and tell me where it is. I'm not going to do that because I'm not educating you around ICT concept. He's got a full-on free mentorship, the 2022. That's where I learned this stuff. Go and find him. He's also a great trader, and it's quite entertaining to watch his videos. So is there a value gap here that we can find to use that as a target? And I can see 2 value gaps. If you haven't seen them, I'll just show you now. So I went in here and found that value gap there. And let's change this color to be gold. So that's the area where we're targeting our trade. And we've got another value gap area there. Okay, these are areas where the market's going to go to fill because there've not been any sellers. They crashed through and people that wanted to sell at this price didn't have the opportunity. So these are areas where it would come back. As you can see here, where I've been taking some profit, this was the area, the third one, this area from that candle to that candle, where it went and met the demand, and I took some profit. Thank you very much. And then it crashed down, and let's see what happened next. As you can see, it came back up. This was my 4th or 5th position, I think now. So I was bouncing this price, getting profit all the time. And then we've got to 2 o'clock. This is where the news broke. Still in London. And then I had some tight stops. At this moment of time, I was around 300 in profit. And with my stops here, I'd taken this trade out. And with my stop here, I would have risked £100. So I would have made £200 on the day. So I kept it pretty much risk-free with some profit. And I was willing to let the news show me the result. Something key about news is don't trade the actual news, because it's very volatile and it's very hard to predict what's going to happen. And it can go either way. But there's a lot of manipulation happening. So if you don't understand it, like Scruffy says, stay out of it. That's what I did. So I got an entry here. It crashed all the way up there, took all my profits, and that was the trade of the day on the euro dollar. And I'll just show you that. So I was bouncing the price. I closed. I could have kept this going. It went all the way to. I would have made more than that, but obviously I wanted to close it because of the news coming up in US Open. Open at 3:30 Italian time, and I was quite happy with that result. So I hope this makes sense to you. If you've never heard about ICT and the trading, the fair value gap will be quite difficult to understand. So make sure you go through his training. And also the Scruffy Madness, where I'm bouncing the price. That is also another way of trading that you can find in the Discord of his Discord that he runs on YouTube. I am in that, so if you join that, you will find me. I don't make any money out of this. I just generally really enjoy his content, and I think it's an amazing community. So I really do. I'm happy to promote Scruffy and the method that ICT that is shown, which is free on YouTube. You can go and learn it. Something that is interesting, I wanted to point you out, because there's with the Scruffy Trader trading, you will find a lot of the time Fibonacci retracements, and retracing to the 50 and the 61s that are the normal retracements, the golden eye that you know. This is what's interesting with the fair value gaps from ICT. They're always respecting that area. Okay, so I wanted to show you that quickly. If we throw on a fib retracement, that fair value gap from there to there is on the 60, between the 61 and the 78.6. 78.6 is exactly where the fair value gap is for that retracement. And as you can see, you can have multiple ways of trading this. And the way ICT is looking is not putting anything on the chart. It just looks at the price, and that works. But in reality, they're similar concepts, because ICT will talk about the price retracing to 50% and getting discounted, and selling premium and buying discount. Similar way, Scruffy Trader will be talking about retracing from the 23 upwards. So these are different schools of thoughts that you can use in your trading, and identify what works for you. And also, what is quite interesting is that when you hit the 61.8 and the 78.6, that's when the fair value gap has been filled. Then you see the reversal, and it's quite a nice it's quite interesting to watch. I hope you found this useful, and this was my trade from today, and I will be posting more of these. If you do like them, make sure you comment, and I see the more people I see commenting on this, the more I'll post trades. Otherwise, I'll do other things. I really like the mindset side of trading, and there will be videos on that. Also, subscribe to the channel if you haven't. We are very, very slowly building a following. Remember, we're at 60 people. Let's see if we can hit that 100, and make sure you like the video. So catch you on the next one, and have a good day. Trade safe.